Let's look at Chinese corporate bonds. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So let's first get a bit of a bigger picture. We did see some rotation yesterday, a big move here into basic materials, and some selling in the utilities and industrials. So there are, these constant rotations, and that's something to just be very aware of when it comes to the market, is that every now and then, a new temporary theme will develop. And it's, of course, very beneficial to ride that theme. Here in the megatrends, big sell-off in the blockchain portfolio, but a substantial rally in EV charging stations, as an example. So even though EV charging stations have gotten pretty, slaughtered as of late, all of a sudden you see a bid. And that's a more, broad phenomena that sometimes it's a good idea to have to look a bit bullishly, temporarily at least, at those who are very beaten down, and, the inverse as well. So we will go here to fixed income 360. So I have a bunch of different kinds of fixed income instruments here. You have, of course, the bonds, you have convertible securities, dividend stocks, which also are a kind of fixed income. And then you have option strategies. And there's a lot of things now happening when it comes to options and ETFs. So here is a selection of ETFs that are easy to purchase, and you get option strategies, so you don't have to get into the complexities of options yourself. You can do it through an ETF, which is very, very, very beneficial. And options, strategies, this is a type of fixed income. But the focus of this video is Chinese corporate bonds. So we see a 10% move here from the low, pretty close here to the 52-week highs. So we go here. So this is the big picture, weekly data points. We start here with the time cycles and the seasonality. So the time cycles here, they have been rather reliable for some time. Time cycle mark below, rising phase, decline, rise, decline, rise, decline, rise, decline, rise, decline, rise, decline, rise, decline. So there's no perfect, this is far from perfect cyclicality, but you can see that there is something going on here with these time cycles. So the time cycles, they do suggest that we are still part of a rising phase that peaks around the autumn-ish period, August, September-ish. If we look here at the seasonality for CBON, so May, the current month, is actually one of the more mediocre months. June and July, those are some of the strongest months. August is weak though. But you do have a couple months on the horizon here that are strong, especially July, and that fits rather nicely here with the time cycle. So there's reason to expect some potential strength here going forward due to these two items. You also have the technical pattern that's formed before. And that is a head and shoulders pattern. So let's draw that in. So here we do form a head and shoulders pattern. But this is also a good case of head and shoulders pattern that, yes, it is a head and shoulders, but it doesn't really play out, in the textbook way, where you take the measured move and then it's supposed to, go down that amount. The head and shoulders pattern is a bit paradoxical because when you form a shoulder, head, and a shoulder, you will also have a cluster of horizontal support levels. And that's how a head and shoulders pattern can become bullish, actually. Well, at least they can strongly limit further downside. But anyway, you do see that this one has a history of forming this head and shoulders pattern. So there's a probability that something similar is developing, because there is this mirror effect. You see that before we formed this head and shoulders pattern, we had this cycle here, and then you have the cycle here, and so there's a very real possibility that this here is forming a left shoulder that we are going to form a head during the current time cycle, and then when it comes to the next time cycle, that's when we will form that right shoulder. So these are hypothetical possibilities. Obviously, it's a bit of a dicey situation to project, future price developments, because this is no way into the future. Here we are talking about what hypothetically could happen, in late into 2022 even. But I do think that you see the pattern yourself, and other investors see the pattern. And behind many technical patterns are more deeper and more profound mathematical relationships. But a further increase here, it fits with the time cycle, the seasonality, and you could argue that we are very close to a breakout. The PPO is a bit extended, so that, it limits the bullish momentum a bit. But the RSI still has some fuel left. You see that previously it has been higher during the previous cycle peaks. Hence, there's more fuel left in that engine. So let's look here at the daily data points. Yeah, so when we look here at the RSI, the PPO has been higher in the past. So that means that there could be more upside. So you could get the momentum here from time cycle, from seasonality, from a breakout, and also a breakout in the context of not being that overextended. Regarding RSI and PPO, the accumulation distribution is sharply increasing. I mean, there's a lot of money that's now all of a sudden flowing here into the Chinese corporate bond market. I mean, this is substantial. Look at the accumulation distribution here. And then this. So something is definitively happening. This is pretty big. So that's interesting. Going here to Finvest, they draw trend lines. You certainly have a topping pattern. That's true. Given that May is a bit of a mediocre month seasonally, it could be that May might not necessarily be the month when the breakout happens, but yeah, there's nothing, given the other data, there's nothing to really be panicky about as far as the multiple top yet, but something to just be aware of. When we compare the CBON to the LQD, so you have the VanEck Vectors China AMC bond ETF CBON versus the investment grade corporate bond ETF LQD. So basically China versus America. Expense ratio is much higher here for China, which that's a bit of a problem given that the bond market is not where you get the big moves. Hence a 0.50% expense ratio. It is very high here for a bond ETF. So that's a bit of an issue, but there's not much competition in this space either. And without competition, guess what? The expense ratio will be higher. Looking here at performance, year-to-date performance here is significantly higher here for the CBON. And basically, if you look at, if you look at 3 years, then you see that LQD beats CBON, but we do see a trend here in favor of the CBON. Looking here at, the holdings, so you got some, got a nice mix. So here you can see other is 39%. I'm not entirely sure what other means, but corporate is 36%. Sovereign is only 12%. So overall, I do think that we could say that this is a corporate bond ETF. Okay, so to sum up my take here for this ETF, I do think that the Chinese bond market is definitively something to have on our radar. There's a very interesting pattern in development. So yeah, definitively. Take a look at this one.